Good afternoon. It's Quant Trade Edge, and there are so many setups today that I needed to do a midday update so that we can keep the daily wrap-up focused on the Forex. This is a chart of the S&P 500, and we had a large gap up, and as typically happens with a large gap that's out of the true range of the previous day, is you get a counter trend reaction. It takes a little bit of time to digest this gap. Now, how do you know when that stops? Well, going back to our bar counting, we got a very clean two waves now on the 5-minute that ended at 9:10 in the morning. So the first 40 minutes did this, and then 3 bars in here is a hoagie. More importantly, this green dot is something called the anti-climax pattern, and that was a pattern introduced by Galen Woods. It basically just means that the lows are accelerating. The distance between here and here is less than the distance between here and here is less than the distance between here and here. And it's somewhat climactic to have 3 bars accelerating, in a direction. But again, we don't typically just buy into, catch a falling knife, as they say. You wait for a green bar and buy above that green bar. And what just coincided so well here is, in addition to the 2 legs, in addition to the anticlimax, in addition to the hoagie, this little blue arrow that I've shown you before is something I call the P1, which is kind of a proprietary indicator at this point. But there were just plenty of reasons to buy above this little bar here. And we ended up getting 3 solid waves to the upside. And the other interesting thing about these 3 waves, 4 waves to the upside. Count that right, 1, 2, 3, yep, 4 waves to the upside. And the exact stopping point was 46.10, which is the exact price of the open. And, my target for this was the open, so that worked out nicely. And then, if you notice, this entire move down is 1 leg. And if you remember from our recent videos, when you get a big violent move in 1 leg, that's a liquidation flush. That is a move against the main trend of the market. And it does that to freak you out. It's very scary to have it just go straight down that far in 1 leg, with very little reprise. So that happened again, but notice it made a higher low to this previous low over here. And we also got a second anticlimax pattern here, which, without the P1, so, the standard buy would have been above this with stop below this. And as you can see, that has held up really well. And if you would like to learn more about the anticlimax pattern, I've worked out an arrangement with Galen. If you email him directly and mention Quant Trade Edge, he'll give you a discount on his materials. But I highly recommend them. They are well written and explain things in an easy to understand format, which is a completely different skill than even knowing how to trade, which Galen does. But there are a lot of other people who are wonderful traders. I just have the hardest time in the world understanding their works, their writings. So look down in the description and I'll have that information there. So right now we're heading back, and since the first time was repelled by the open, I would expect maybe a smaller repel, and then we break through, possibly to the high, and then maybe some consolidation in here before going even further, probably into the close. So that's the look right now. The other thing that could happen is we could just zone out. This was a very large gap, and there's nothing wrong with spending the whole day to digest it, and that could also be what happens. So another thing I wanted to point out among U-turns here, gold. This morning, we had a big down day yesterday, and then we had what looked like a big down day today, because the news today is, Russia's talking peace, and people are thinking that the war might be over. And a couple of things to notice. One is, we ticked below this and we pop back above it, but if we break it down to the 5-minute, there was nonstop pressure that just kept pushing this down, but then at the bottom, we got a very clean ABC pattern, A, B, let's see, this is technically a down bar. These are all technically down bars, so I guess in theory this was the last up bar, this is the down bar. And this is where it helps having the hash marks, so you're not having to do this yourself. But, this one's clearly up, this one's clearly down. This is outside, inside, down, inside, so that's why it looks a little weird. If you want to draw it from highs to lows, it's pretty much up to here. So this is your official ABC up that ended at 1902.3. So we had one wave up, one wave down, one wave up, one wave down, one wave up, and this didn't take out 90. It went exactly to 1902.30. Another wave down, and here, as soon as we took it out, there was no heat. 1902 all the way to 1919, about $16, $17. That's a lot on gold. And the size of this pattern, your risk would have been $5 or $6, and you got $17 in pretty short order. And we're continuing to go higher. And I do think that gold is going to be one of our good setups for tomorrow for the Forex trade. If we take this out, we've got a trap, and we've got a decent tail. If this turned green, that'd be even better. But it's got enough that I like this for tomorrow. And another pattern I wanted to point out was the volatility compression pattern. And I posted this on Twitter Live earlier, and let's see if we can take all of these off. For the volatility compression pattern, what we're looking at is ATR3 divided by ATR20, and there's nothing magical about that ratio. It's just something I've backed into, so I just use it so I can filter. And then the other thing we look at is volume. And there's two things we're looking for on volume. One is the color of the volume bars, and one is the size of the volume bars. And we want the size to be relatively low. So we want the volume, we use the simple 30, and that's something I copied from Minervini's work. He does that on the daily chart. I wasn't sure if it was Minervini or David Ryan, but one of the Investor Business Daily methods. And we can tell here, if this was the top of our pattern, I was actually watching it right here. You can see from my Twitter feed, this was the initial breakout that I was working on. And if we look at the criteria, well, okay, on this, ever since this dumped here in red, the right side of this, we want it to be predominantly green. And we've got green, 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 one little red here, green, one little red, and it's all predominantly green in this consolidation. And we want to see volatility compression. We want to see ATR3 divided by ATR20 of less than 0.7. And we got that a couple of times. We got that in here. So, this could have been part of it. I was looking at it around here, right in here, but then, we've kind of gone down. Now we're sort of bouncing above 70. We did tag below 70 here, but we've already broken out at this point. But again, one of the things that reminded me to look for this pattern, or do my scan in the stocks that looks to this pattern, is the fact that the S&P itself looks like this today, right? If we look at the actual S&P, it kind of looks like we're doing the same thing. The NASDAQ looks like we're doing the same thing. The Russell is the strongest. It doesn't look as much like that, but it is just the strongest one out there. So that's always just a good sign to look for that pattern. But the pattern can occur even when the market doesn't do it. So it's a good scan to just remind yourself to do every day, because you have very limited risk. Taking this pattern here, where it broke out right here, and then kind of the bottom of your risk zone is is here. That's a very low amount of risk to take for what's already kind of done too, and it's probably going to go a little further. And I do this scan on stocks that have weekly options. Oh, there we go. because I'd like to get more bang for my buck when I find one of these patterns. So rather than doing it outright for the full notional of the stock, if there are weekly options, you can get a lot more leverage. So anyway, these are 3 really good patterns that we saw today that I wanted to go over because the wrap-up is going to be long enough with Forex talk. So have a good rest of the day.